Welcome back, everyone. This is the Euro trade. It is the last day of the Euro session for the week, but also for TopstepTV. We will be off air completely tomorrow because it's obviously Good Friday, so there's like a whole Easter thing happening. If you're here for the first time, welcome. My name is Deeyana Angelo, aka Market Stalker D. I have been trading for about 18 years. 13 years out of that, I've been trading futures markets in various prop firm companies. I consider myself a commodities trader, so I'm not really into equities that much. I do trade DAX and YM every so often, but generally my products are things like copper, platinum, crude oil, gasoline futures, products that you don't really see here a lot. And although I am a Series 3 qualified trader, everything you see here is for educational purposes only. Bruno, our lovely moderator, has already posted the risk disclosure, so have a read. Don't just blindly follow trades unless you actually understand what we're getting involved with. So don't just be, like we say, don't be a lemming, right? So make sure that you fully understand the reasons behind the setup. So in that vein, let's have a look at what copper has done. So copper has been smashing it down during the Asia session. Now, typically London tends to reverse that. At the moment, we are actually sitting at the London value high area and sort of consolidating there. So the value high is 460.15. So let's plot that on the chart, just to kind of go through that process. But as it looks now, I am looking for longs. We got up to sort of initial balance high and immediately sort of shied away from it. I do want to see that break. But if we pull back down to the value high, I wouldn't be that opposed to front running that trade. I am going to start with a 3 micros and then I'm going to see if maybe we can go up to 5. Basically adding inside the zone. I do add based on my maximum adverse excursion, so it's not like, oh, let's just add willy-nilly and DCA into the position, as people like to say these days. But basically I will be looking for a reversal and maybe a test of VWAP, which is up at 465. Looking at some options levels, we also have GEX1 up there. And around these levels at 461.25, we do have the GEX2, which is also a pretty strong gamma exposure level. And then all the way back up, we have some call and put strikes, all in a reasonably tight area between 468 and 470. So that would be a more aggressive target on any longs. Copper is very directional on most days, and even though you can have days where it's a little bit more range bound, I don't really like fading it if there's like an obvious extension and a sustained auction in one direction, right? So that's kind of the plan. If this continues to go into the value area, we may have a special situation play, but I'm probably expecting to see a little bit of a fight exactly where we stopped right before London Open. So yeah, let's see what happens. I see my sister is in the chat as well. Good morning, Sandy. Guys, she's using refresh rate medium, don't trust her. That's just the data, like that's such a non sequitur comment there. Oh yeah, she's using a medium rate. Like what are you even on about, man? Hey D, how can we get Jerome's slides from yesterday? Okay, so we can we are working with a team to actually get that up on the Topstep website. As yet, we still don't have a link, but I will keep everyone posted as soon as I get it. So, obviously we don't know where it's going to be. But yeah, they are working on it, and we're going to make a little course out of our Neuro Wednesday sessions. If you were here yesterday when Jerome was talking to us, we're actually planning to make a whole little mini course out of those sessions. So, stay tuned, and we will let everybody know where those slides are going to be located for download. What's my edge? My edge is higher risk reward, selective trade locations, and then running them for longer than most people, right? So if I find a decent trade location that has legs to go either into a mean reversion or sustained auction, which can sometimes be synonymous, that typically means those trades have a higher risk reward, so higher moves, more movement naturally, right? And that's very important for the stability of any system. I see a lot of scalpers who actually don't have a lot of years behind them, nor enough sample size to even have an edge over 1 week, which is why we see people who get funded in 2 days and then get to the XFA and then they blow up. So that's not just psychological, that's also time. Not really being respectful towards the negative risk rewards. And having been the VIP coach now for these last sort of 2.5 months, most of the scalpery people that I see in there, they have a negative risk reward quite heavily, sometimes to like minus 11R, but very low accuracy. Like that ain't working, man. Right? You're never going to be profitable over time. You might get lucky in, a few days, but over time, which is the only judge of anyone's performance, the only time that is going to be successful is if you have a high accuracy. So you can't have it both ways, be low accuracy and negative risk reward. That ain't working, okay? So just be careful when you're doing system design. A lot of people in this industry are high on hopium, and they're like, oh, but I'm a really good trader because I can make, the 10 grand in 1 day on a practice account. And then you throw in some pressure and you throw in the fact that they're actually not managing risk very nicely at all. In fact, it's all just very haphazard. And they're like, why am I not profitable? I actually took a 4 grand payout this week. So, there's something to that. So let's see what this actual trade is going to do. So far, it's a bit slow. Still inside the initial balance. One of my rules states that we have to see the other time frame participants stepping in outside of the first hour of trading range before I do anything with it. And then I want to see that the sustained auction is actually reasonably strong, or at the very least hanging outside of the initial balance or around the edge of it if it's not super strong. Without that, there is no setup. But we do have a strong level, so this is value high. Whenever we test value high and we kind of open either very near the value high inside of it or slightly outside of it, that is still a possibility for either a sustained auction in the same direction or at the very least a value rejection trade, which granted might have a little less legs than if we were to open outside of value. So right now this is kind of opening right on the nose. Where was the value open? Let's just delineate the initial balance here so that we know what we're working with. Let me go on to the 30-minute chart because it's clearer. So this is your initial balance, or our initial balance. So as you can see, still trying to decide where it's going to go. On the 30-minute chart, we do have this 9 EMA here. And, I would like to see that get claimed before we do anything with this. So however you spin this, we do need to see some committed push outside of this consolidation area before we engage into a trade. Can I explain my strategy? My strategy is somewhat of a unique blend of looking at the market structures, so supply and demand, Wyckoff, however you want to call it, then looking at how the market is opening in relation to the previous day's distribution curve, and then looking for evidence of strength or weakness in the current day's auction behavior. That's all market profile. However, I also have my own concept of exhaustion areas that are taken from some statistical ranges, like a twist on the ATR, but I use regular trading hours for that, and then I plot them on the chart. So if you want to see what that looks like, this is what my charting software looks like. This is my indicators. We paid a lot of money for this, and we also sell these, right? We're actually working on translating them into Ninja. Maybe, just maybe, we might consider translating some of the more simpler tools into Topstep X as well. But yeah, my edge is basically looking for that higher risk reward with a blend of like about 3 or 4 different concepts. I do look at the options matrix as well, because over the last few years, we've seen a lot more of the 0DTE options do like a lot of shenanigans with the price action. So I feel that at this day and age, if you're not looking at that, you're sort of in a disadvantaged position even more than you already are. It's all very well looking at, moving averages and all that. They can be helpful, but to me, it's a lot more helpful to know that, there's a large, like let's say a call strike coming up after an extended move. So yeah, that's kind of my thought. My stop losses are always volatility adjusted, so I'm never like just YOLOing it with the stops. I know what I want to see. I know what the, average session ranges have done, and then I basically make sure that the stop loss I'm using is wide enough to keep me in the trade for at least 30 to 40 minutes with no sweat, no like, oh my God, what's going on? Basically getting whipped out left, right, and center before the trade actually has time to work out. I see this a lot where people are using super, super tiny time frames and expecting that somehow they're going to get like this massive, massive trade out of it that lasts for hours. You can't really have it both ways, right? You either have really tight stops, or you have stops that are wide enough to survive some, liquidity grabs or a bit of a wiggle, and any sort of tape bombs that are not super horrendous, like we've seen a lot these days. But at the same time, people want tiny stops and then a million R multiples. It's like that is also not very conducive to holding trades longer, because you're not giving it a chance to work out. So, there's a few things that goes into it and that you learn over time through great difficulty and usually mistakes. So, none of us who have been doing this for a long time came by our knowledge because somebody just told us so. We tried one way, that didn't work out. Then you go through your plan and go, what am I doing? I'm a muppet. And then you modify that in the next week and just keep going, right? And eventually you tweak things over time. Right, so if we can get to, let's see, if we can get maybe to somewhere nearer this value high, I might want to open a trade. I'm just going to make myself a little bit smaller here because I feel like the whole screen is being obscured by my face. There we go, that's a bit better. So then I don't have to worry. It's like, can you see it? Can you see it? Maybe I should get the green screen back in action. Although last time I was using it on my channel, you can find my own Market Stalkers channel below this video. When I was using the green screen, I couldn't really control the light in this room properly. And people were like, oh yeah, your green screen looks like shit. So I stopped using it. So yeah, we'll see whether in the new house we can set up a really nice, thing. I'm planning to get like a little neon sign and put it up on the wall and stuff and everything. So it's pretty good. Port City Investment says, why do you trade metals easier than ES and NQ? It's not that it's easier. I was always a commodities trader, right? I came from Forex, so I did 5 years of only trading Eurodollar and nothing more. I started in 2017 just for the people who are maybe newer. I'm not young. I'm not that young. I'm in my 40s. I know that I look like a kid, but I'm not. Baby face over here. But basically, I have been doing this since I was 27 years old, so I did not start super young. In fact, I had a pretty flourishing session musician career as a pop and rock musician for many years, right? Okay, let's try going in like this, and we're going to be using a 45 tick stop today, so a little bit less than we did this week, because the volatility is not super crazy. And if this dips against me even more, then I might add 2. But that really needs to happen somewhere around 460, because that's where the GEX2 is. And that's where I would like to pop in another trade, which would improve my average. One thing that I have a problem with, I know that everybody's talking about Tom Hugard adding like a lunatic into positions, but he does trade equities, and I feel they are more directional when they decide. But he was also very straightforward in one of the interviews that I've seen with him, that it actually blew up in his face last year. So be very careful with that. I've always had a problem with the fact that anytime you average in, it messes up with the original trade idea. Now, if you get a nice directional move, that's a very valid point. But when you don't, that bloody hurts, right? It's going to smack you across the face and you won't even know what happened. So if you can't really determine in some sort of a methodical way whether you're looking at a range-bound day, please don't add in range-bound days. That's like quite possibly the worst thing that you can do, because the range-bound trading, it takes precision and accuracy, and yet I see 2 types of people. So it's not Dolby. Dolby likes his ranges, so he will be looking at a range and going, okay, this is the high, this is the low, let's try and get involved there. Now, he has been recently struggling with a few things in regards to his own courage, I would say, and conviction in trading setups. But the way he does it, just listen to how he talks. He tells you where the highs and lows are. And then, the execution kind of lets him down a little bit. So he's working on that. Everybody's always a work in progress. Some of us have a pretty decent grip on our mental side. But even that slips. You're never going to be like a superhero where you never go on tilt. It's like, yes, you will go on tilt, but it's how you behave in the moment and how quickly can you identify it. And then, as we've seen Jerome talk to us yesterday, how can you replace that? So recognize it, and then work on sort of replacing those behaviors with something else that is more positive. But what I see frequently is that we have a range-bound day. We had one, 2 days ago. And instead of everybody going, okay, this is a range-bound day, how can I make this work? What do? They do breakouts at the tops, and they try to do a breakout at the bottom. And then the price comes back on them and they go, ouch, what the hell? This is shit. It's like, it's not shit. You haven't identified the day type correctly and you're complaining. So don't blame the market, blame yourself. If I don't identify the market correctly and I'm doing stupid things, I'm not going to be blaming the market. I'm going to go, okay, let me see what I did. Let me go back to the journal. Did I stick to a bias, which is usually a terrible idea, or did I come into the trade with an open mind and just go, right, what do we have? And when people ask me here, what do you think about copper? Unless I see something obvious like this kind of development, but even this is still not set in stone. I still don't have an extension of the initial balance, so I'm still missing the one condition, right? But I'm trying to front run it based on the idea that value high is usually a pretty decent area to run trades back to VWAP. We are about 0.7% away from VWAP. That means we are far enough away from it to try and run a mean reversion trade, okay? And, if we get all the way up to where Asia started bleeding, yeah, that would be a great trade. But, at the moment, I don't have all of the puzzle pieces lining up just yet. It's still early in the session. London is typically a lot slower. And you've seen since Asia stopped trading and we started in London, we have been in a consolidation pattern, right? So we need to see which way they want to take it. It's quite feasible that it goes into value acceptance and carries on. But, if that happens, I'm not going to keep trying to long it. I'm actually going to flip sides and go, right, they've extended lower. I'm wrong. I have no problem being wrong. And I just let it go. And then I see how, in the light of the new data and information in front of me, how I can basically get involved and not do the next trade painted by my past experience, right? By the fact that, oh, the other trade lost. And the only thing that will help you there is to have a controlled loss. If the loss is too big for the account size that you're trading at the moment, and you're risking, 20, 25, 30%, 50% of the account balance, that's going to hurt. And of course, next trade, you're going to be like, oh my God, I don't know, if this one loses as well, I lose the account. That's what screws up people more than, trying to trade small. Let me show you a Twitter post that someone did just the other day. They took my advice to size down and slow down. I don't think they're in my VIP group. They're just somebody who watches my sessions. Whether you watch them live or after the fact, it doesn't matter. They're still very useful. But so here is Tom, T3 Metrics, saying things like, what's changed for me this month in the Topstep XFAs? Size down, slow down. I'm not taking this for granted. I had a disastrous February/March, but if I manage risk and execute well, I'll be okay. So let's see. All mainly base hits with an occasional bigger day. But look at this. Like in the 2.5 month period, he's really only had a couple of bad days, and they were very, very controlled. And notice that his bigger days, if you add up all of these winning days and you divide them to get an average, they will be about the same, or maybe even basically much bigger than this little losing day. So, hey, T3 Metrics, Tom is in the chat. There he is. So yeah, I thought this was a very good opportunity to showcase what sizing down and slowing down can really do for you. I'm very glad you posted this, Tom. So thank you for that. I'm looking forward to arranging a day when we're going to be on TopstepTV together. And I think this is a great journey. Well done. I mean, this is stellar trading, absolutely stellar trading, right? So it's like, that's what the power of sizing down and slowing down can do for you. Suddenly you find consistency. And, granted, most of you guys and girls, you're not bad traders. You're just like using inappropriate size. So remove that like emotional roller coaster and you can see this a lot clearer. It's still the morning. I'm waking up, so give me a chance. Fundamental says, initially made 360 during the Asian session on my 50K XFA, but not greedy. Instead of locking out, ended up losing profit. Luckily, I set a daily loss limit of 200. I need your advice. Well, let me ask you, why did you keep going? Like, why wasn't it enough? What were you aiming for? Like, did you have a defined exit? That's another problem I see. People don't have a defined exit on the trade. Like, for example, for this trade, if we can get it, my exit is not going to be past VWAP, because this is a mean reversion to VWAP from the value area. And, if I get that, awesome. That's great. But, if I don't, that's also great, because I'm only going to be risking $168. So that, the next trade is not going to be, oh, wow, I need to get that back. If I lose this trade, I'm going to wait. So don't just go into another trade, right? Wait. But if you didn't have a well-defined target and you ran into, I don't know what you were trading, but if you ran into the London Open, usually things turn around for London Open. They do this like Frankie fake out where Frankfurt Exchange starts, but because it's a relatively small session, it technically does this fake out move and then reverses on a vast number of days. Okay, right, we're at 460. So let's see if some buyers appear here. There are a few, but we just need the velocity of the buying to increase a little. So let's wait and see. Yeah, so you have to have a defined exit, whether that's a time stop or an actual price point. That's another matter for, a different discussion, I suppose. But I have both. So for me, it's either going to be time or it's going to be a particular price. If the price is not reached by a certain time, I will stop it out. and not because, oh yeah, they just trades based on time. It's great, just random times of day. I actually have expectations of what we just see for particular times, right? So if we get close to settlement, I'm probably not going to hold things into settlement, because you can again have the take profit move that screws up the profit that you already made. Similarly, Frankie fake out, when London opens, you get this. So this was like typical Frankfurt fake out, right? We went down, whipped it all the way, whipped it back up, and then did absolutely F all since. So consolidated. So now this is a decision point. It's like, what is London going to do? But we don't know yet, right? That's an unknown. However, if I was still holding some Asia trade that I pointed out here, maybe you went short at VWAP, and you got to the London Open, this is a danger zone. It's a danger zone. So try to have a very well-defined exit. Don't just wing it. Don't YOLO it. Identify whether it's a sustained auction, whether it's a neutral day type. Did we extend the initial balance to both sides? Where is the nearest danger area? Things like VWAP, overhead supply or demand area. Something that could something that could throw a wrench in the works with further smooth movement. Now, if I diagnose this chart, I can see that we don't really have much in the way all the way up to here. But I'm still only aiming for the VWAP, because that is the nearest danger point. I know that most products out there, they will get to VWAP and then have some sort of a reaction. Whether we get strength through it or not, that's something that happens after, but there's usually a bit of a speed bump whenever we run into it. So to go back to the question why I'm not really much of an equities trader, when I got into prop, they put me on the fixed income desk first, and I hated that. I absolutely did not like the fixed income products. I still really don't. Like, if I do anything with fixed income, it would probably be options related. But me doing intraday trades on fixed income that generally doesn't move unless there's like something going on with the monetary policies or now with tariffs, they're actually pretty dull to me. So, I need, what I've learned about myself over the last 18 years is that I need a certain amount of ticks available per day, per session, in order to make my efforts of opening a trade and getting involved in it worth it, if that makes sense. So anytime I see less than about 80, 90, 100, 120, I'm like, oh God, this is going to be very difficult, because you don't typically have the follow-throughs like this, the nice follow-throughs. So when I said I didn't like fixed income, they put me on an equities desk. So they're like, there you go, trade ES. So I go to analyze it, I do all of my tools and stuff, and I put it in an Excel spreadsheet, because back in the day I didn't have this. This came much, much later. So I look at it, and the average daily range was, I kid you not, sitting at about 16 ticks per day average. 16 ticks. That's like 4 points. 4 points for the entire day, right? So I was like, what? And back then, NQ only had 75 points, so like about 300. And the candles were not really that conducive. Like, if you had 70 points, one 30-minute candle would still be like 35 points. And there just wasn't enough follow through. And I got a huge dislike with equities because of that. I just couldn't see why people were trading that. And just FYI, this was 2013. So that stayed that way until COVID. So 7 years, we were in a daily range between 16 and 20 ticks on ES. So, to me, it was like a dead horse. It's like, why are we trading this? This is just ridiculous. So I gravitated towards a slightly more volatile product, and that was equities. Sorry, that was commodities. It was crude oil. So I traded crude oil quite a lot, and gold for 12 years. That was like, oh, that's what I trade. Over the years, I also got involved with natural gas. I popped a couple of trades in copper, but really my interest in copper came when I started doing these sessions. And crude oil was just being very weird and no longer conducive to the style that I was trading for 12 years, right? So I needed something else. So in a way, the whole last year for me was a bit of an exploration moment to see how, to see how, markets move away from DAX, because my main product for London is DAX. We still don't have it here. Actually, let me do my Eurex plug. You know what's coming. If you haven't upvoted Eurex, please do. We are trying to do that. Port City Investment says, I make six-figure trading only one chart. Yes. Well done for you, mate. I don't like that, because if I have no good setup on ES, I basically find one has a good setup. But, each to their own. Each to their own. If you can just make your profits on one thing, that's great. But I was never an equities trader. I'm a commodities trader. Like, why do you have such a problem with that? I don't see people are like, oh, why don't you trade ES and NQ? Because I don't like them. NQ is a psychotic product. When you look at how it moves, it has this like spaz moment, or like it looks like it's having a seizure constantly. And recently I've seen ES do that same thing. Now, why am I like more? Because once it does move, it does have a smoother movement. But if I'm going to trade equities, it's going to be DAX during London, because again, very smooth. It doesn't do the psychotic seizure-like inducing price action intra-candle. So yeah, I don't know why people have such a problem. It's like, are you jealous or something? Is this like the same thing as when people have, I don't have human children, and I've never really been into, I love dogs and stuff, and, I'm just not really, I don't, I don't plan on having children. And then I say that to other people, and they're like, oh, but you're missing out. Why don't you and it's like, dude, even if I wanted to, I'm like 45 this year. It's like, it's that train has passed, but I don't want to, right? And this is kind of the same thing I get with ES and NQ. I say, I don't really trade ES and NQ. What do you mean you don't trade ES and NQ? Well, it's like, there are other products out there. Like, I hate to break it to you, but in the olden days, prop firms actually had an equities desk. They had a commodities desk. They had an agro desk. They had a fixed income desk. And you couldn't just have 97% of traders all trading the same product. That would be like, for me, it would be a huge risk to the company, right? So they would have different openings on different desks. It's like, and if there were no openings on the equities, they would be like, well, we can't really offer you an equities position. But yeah, if you want to trade natural gas, energies are open, But these days it's like NQ or bust. It's like, or ES. There are other products out there, just like, But if you can do well on one, that's great. Just don't bash other people who are not in favor of your product. It's like, I don't bash people for not trading copper. When somebody goes, no, I don't trade copper, I'll be like, oh, cool, what do you trade? And then we have a constructive conversation. You don't get into a conversation with a colleague and just go, but you should be trading this. It's like, you don't know that. You don't really, you're not me. So, Yeah, Blue Boy says, YM is cool, dislike that persistent spread though. Yeah, it does have a bit of a painful spread sometimes. I've seen it go to like 8 ticks as well on occasion, especially like in the last sort of 2-3 weeks. So yeah. Somebody's saying, I'll have my child with you. No thanks, mate. And you won't. So let's just put it that way. Blue Boy says, okay, we seem to call the same thing the initial balance for London D. It's my favorite trade. Yeah, so break of initial balance is a very known setup. So call strike Port City investments. So call strike prices after a move are like magnets. Essentially, you have found. I haven't been mapping out calls and strike. Yeah. So basically, you have the bigger areas, which are calls and puts, but then you also have the little gamma exposure levels where you also have quite a bit of interest, but they're not as impactful. However, they can be pretty good stopping points or orientation points, because they can actually act as an accelerator as well. So it's not like, oh yeah, we're definitely coming up. Like, for example, on gold, whenever you come up a call strike, what do we expect to happen? Well, certainly not a reversal. It's been going, massively up. So I would actually expect to maybe slow down a little bit, but to ultimately behave as a accelerated because I expect more call buying to be happening there. So again, context is very important. The structure of the chart is very important. You know, what is this particular product doing? And clearly, if something like gold is just screaming to the upside, you can use the call strike as maybe a target, and then see how it behaves around it. And then if they kind of break through it, maybe you have another trade, right? So that's kind of how I look at that. But generally, whenever we have a very, very extended move in copper that happened in a different session, and then we come up either a, let's say, put support or GEX 1, 2, or 3, those are typically pretty good at stopping further price falling. I'm not going to say never, nothing works 100%. So I'm not going to say, yeah, you definitely come across, GEX 2 and it's going to 100% stop. It sometimes won't, right? But, take in the context, take in another area like a distribution distribution curve from London yesterday, and put it all in a nice little, package, put a bow on it, and then you have a pretty decent setup. That's kind of how I look at it. So everything that I usually use on my chart, I didn't map it all out today because it's been a long week. I'm trying to move as well, so everything. I'm living out of a box right now. I have like 3 pieces of clothing. I keep like recycling, so you're gonna be seeing this shirt a lot. I actually have 3 shirts in the same color, but basically it's a little bit chaotic at the moment. So today I kind of got up and I was actually chatting to someone on WhatsApp and trying to just have a bit of coffee and wake up. So I didn't map all of my levels out, but maybe when we have a quieter day, like let's say Monday, I am going to be here, even though in the UK that's bank holiday Monday, but I'm going to be doing a stream and the price action is probably going to be meh. So let's maybe schedule Monday to run through what some of the lines mean on my chart and how we can, how we can actually understand the different areas and stuff, and maybe even go through how these GEX levels behave, which I suppose we can kind of do now as well. So let's put the GEX 2, I'm going to put it in white to delineate it. So GEX 2 is right on the nose at 460. And right now it's a little bit tricky. It's not really giving us much traction. So let's actually drop down to a 2-minute chart and see what we've got. So we do have a demand area here. So this is the Frankie fake out demand area. So I'm also going to maybe put that in a different color. Let's do yellow. All right, so they are actually, to me, this would be a strong move down. So I'm going to close this because I'm not going to wait for my stop to get hit. And now I'm going to wait. This is the danger of not going into, not waiting for the initial balance, because at this point, like, they can extend it either side. But I don't like the fact that GEX 2 was not reactive and we had a pretty big move through it. So again, it's not about not being wrong. It's about understanding when you are wrong and then adjusting. So now after that's happened, I actually have to sit and wait for the actual initial balance to be broken. Therefore, I have no business looking for anything on a 2-minute chart. So now we need to see whether this thing is going to keep bleeding through value or not. So, we're going to be here for a while. Patience, right? When your first trade idea that you were front running in the first place doesn't work, you have to sit and wait, and people don't like it. They want to click another button to get back. Now, if this reclaims 460 in the next 15-30 minutes, I might reconsider the entry, right? And maybe we can guess that it's going to go up, but I don't like that. I really don't like guessing. I like to let them do what they want to do, and there's always going to be a way to get into a trade, right? Always. There's no, panic. There's no anxiety. But it's important to recognize before your stops get hit that the trade is potentially no longer valid. So what I was looking for here is for GEX 2 to hold with some strength. And when you look at the 2-minute chart, is this strength No, they basically just went right back down and then opened with a little bit of a gap lower, away from GEX. So now we're at 59.60. It's not what I want to see for long. But for a short, I really need to see a proper breakdown of the structure. And on the shorts, they're usually quite fast. So, you know, if you run an initial balance break trade, that's one thing. But I prefer to let it smash through, then to come back more like a retracement, and then I'll have a short. So I'm not going to be making this decision immediately after I tried one long trade. So therefore now I just need to sit and wait. I need more information to trickle in. So I need that extension of the initial balance to happen. And I mean, sometimes the initial balance stays there for like forever. Forever. It stays until like COMEX, right? Not very often, but there are certain days where we're just range bound. And, you know, I don't want to trade inside the initial balance. Why? Because it's slower. There's no other time frame guys sitting there going, where do we want to take this? This is all just, you know, algorithms pinging it to like nearby levels. Oh, ping it there. Let's ping it there. So I wouldn't be surprised if this comes back up, reclaims GEX2, gets up to 61.50, then bleeds again. So we need that initiation of other time frame participants. Now, obviously, I'll run these trades here, this stream, so people want to see you trade. But, you know, for the most part, if I'm just by myself, I don't even get engaged before the initial balance is broken. Like, I'm just not even looking at it. I go do something else. I go walk my dogs, you know. All right, let's carry on. So Port City Investment also says, yeah, my stops are never technical, more structural, break of structure stops. Yeah, so similar to me, not even break of structure, but for example, if I'm going to run a short, I would dislike if my volatility adjusted stop of 45 ticks falls somewhere inside the initial balance. I would like to see it fall above this 462 level. Why? Because placing stops at the round numbers is never a good thing. They are going to get hunted more often than not. So if I know that my volatility adjusted stop is 45 ticks, but I also have a structure that tells me 61.80, 61.75 is right underneath that round number, I either need to wait for this to kind of move to a new level, so to kind of completely go away from this structure, and create another little wiggle upside, which will give me structure to come in. Until that happens, I'm just like looking at sitting here and, you know, making sure that I don't risk more than I need to and that I'm not breaking things. So let's explain that in this way as well. So if I was to run a short and I'm looking for 45 ticks, so that's about, let's say it's about 21 points, right? And if I were to enter on a break of initial balance, look at where my stop loss would be. It's like cutting through candles. I don't like cutting through candles. I would like this to look like this. So maybe a test of the supply, of this little supply back to GEX2 as a potential bounce down. And then to have a stop that is appropriately placed. Until such time, to me, it's too high risk, right? So it's not like every trade is a good setup and I'm just like clicking buttons all day. And that's kind of the issue that I have with some of the more novice scalper types. That they're getting involved in some really suspect trades. And I'm just thinking, what? Like, why? But why? And then they're wondering why a lot of the trades don't work out. Obviously, you have some amazing scalpers out there. Amazing scalpers. Like, for example, you see when we had Nick for a tick here, none of his stops were breaking through any structures, you know. Once he would see, like, some sort of a absorption or, you know, an iceberg order, he would go in, but his stop was always away from that high. And, you know, I like that. approach, because you're not in danger. He already looks for the smashes and stop runs and then gets involved. So that's a good scalper, right? And people who are like, oh, I'm just going to do a breakout and then smash straight into a demand level, and then we have the pivotal reaction like this one, right? So this is a classic dip into a slightly larger time frame demand than most people are not aware of because they're staring at a 1 second chart, and then they go, oh, what happened? And I'm like, what happened? I don't know. Let's have a look at the 1 hour chart. Oh, look, you went straight into this structure here. So what do we call this? Oh, a demand area. What do we expect the demand to do? Well, to at least have a little bit of a pivotal reaction. So pop and a whether it's sustained or not, that's a completely different thing. But, when people are doing shorts that look like this, they're like, oh, I'm doing a breakout trade because we broke out of a, 1 second chart, even 5 minutes, and then they're not looking at the hourly, 4 hours, like, where is the bottom of this structure? Well, it's here. Why are you shorting in the hole, mate? Like, what are you expecting? Are you really expecting a different result? And then, it just comes back into their face and they're like, that it didn't go. Yeah. Wonder why. So, things like that, when I see that, I'm just a little bit worried. It's like, can we get off the 15-second charts and maybe do a tiny bit, just a bit, like not much, just a bit of multi-time frame analysis, just to be aware of where you are in a overall structure. But no, they like, blinkers on. Let's trade the 30-second chart. And yeah, I know I keep changing the seconds. That's a part of the bit. It's a part of the joke. So yeah. Port City Investment says, so you are initially looking for the short of value high or break of value high and a long. So I'm looking for the decision. I never really come into the day. I actually have 4 hypotheses. 3 for now, because that's, potential for an inside day. But first hypothesis is that GEX2 and value high stays for longs. So that's already not happening, right? So it's like, okay, maybe not. Second option is that we go into continuation lower. I'm not really in favor of that. Why? Because of all of this, right? So we do have some reactions to tariffs that are more on the long side. And yesterday we saw a very nice, I was actually in on this in my other account. And, I held it all the way. To here. This was already settlement. You know how I talked about the time of day expectation? So look at what happened in the last sort of half an hour of settlement, before settlement. It did a take profit move. So this is why I don't like to hold my trades that I've held for like 3-4 hours prior, maybe even 5-6 hours if I've held them over from the London session, into settlement, because you're going to lose a chunk of it. This would have been like, a whole 1 hour if I had held it. So that's not good. So I'm not really in favor of shorts. So what would I need to see? I would need to see a very, very strong smash of the initial balance downwards, and then to maybe even get some single prints left behind, and then to look for more of a rotation through this. But I'm really not happy that this whole thing is happening at the bottom of the structure, right? So this is why I was thinking longs first. So we'll see what happens. Like, if it's not looking right, or if the smash lower is all non-committal and they're like, yeah, we went down by 2 ticks, but then we reversed, that's not going to be shorts for me. So yeah, I don't know. I always come into the session with no expectations. I don't come into the session going, right, I'm going to make 86 grand today, which I have done in the past. Like, that was, we do have larger accounts and stuff, but they're not accounts that have like, starting point of 4.5K. They're like, they have some buffer in there, right? And it's usually just to do with size. Like, anytime you are seeing people generating a lot of money. They're like, how do they do this? Size, that's how they did it. And usually they get a little bit lucky on some days. And they create a buffer quickly. Now, the problem with doing that, it's sort of akin to winning a lottery, right? So yeah, you might get there, but the likelihood that you're going to blow up an account is much higher. So it just depends on your own mindset. I'm not saying there's a wrong or right way to do it. I just know that I'm very uncomfortable starting a new XFA and full porting it, or even just doing like 3 full NQ contracts, right? Especially in this volatility. I just don't think that's a very responsible thing to do. And yeah, sure, you get lucky. You catch the tiger by the tail, as we like to say. Suddenly you have 20 grand in the account. But the issue with that is then your mindset is all painted with that experience. And then you come in the next day, maybe it's a hangover day, and it's all very quiet, but you still try to generate the same amount. And then what happens? Usually you come off the high and you're like, oh shit, I just lost 15 grand. That's what we see a lot, right? We see huge highs and then very big lows, and you're like, too much drama for me, man. Too much drama. So I stick to, fairly well-defined risk rewards. And even if I suck, if my accuracy goes down to 30%, that model still remains profitable, right? Because of the higher risk reward that I aim for. It's not that I don't scalp, guys. Like, you've seen me do a couple of scalps here. But for the most part, if I don't have to scalp, I won't. I much prefer running my, longer term trades that I sit and I wait. I call myself Market Stalker D for a reason, is because I'm perfectly able to sit there like a chameleon on a branch waiting for a fly to come by so I can just boop and, get the price. And I'm willing to wait forever, right? I'm willing to stay there 3 hours, 4 hours, no problem at all. Now, I know that not many people have that sort of patience, and you want to be in the market all the time. But just consider this statistic. People who are in the market the most active traders, are the camp that loses money the most. I'm not saying that there aren't scalpers. There are not, obviously there are very good scalpers out there. But if you look at how they do things, most of them will do like 3 to 5 scalps per day. So it's not like sitting there clicking and doing 190 trades. If you're going to do that, I would imagine you come more from a market making background and you've done something similar in the past, and that you have about 10,000 trades over a significant period of time. Here's that word time again. To actually find where your edge is in that sort of a. But most people are working off like, oh yeah, I did 40 trades today. I did another 40 trades yesterday. So yeah, I've got 100 trades. That's enough to show an edge. That's 2 days, Show me a year of doing 40 trades a day and tell me whether you've got an edge then. Then I'm going to believe you. I'm going to be like, yeah, okay, cool. You do your 190 trades per day. Awesome. You've got something going. Start a hedge fund, right? But most people are not doing that. So this is where I'm a little bit annoyed. And back in the day, it was quite funny. Every time you saw somebody going into trading, they will be having 2 weeks of profits. And immediately they will start talking about starting a hedge fund or running like a CTAs thing or become a CPO or so. And I'm like, mate, it's 2 weeks. Don't get your hopes up. This is a tough business. And, there's high on hopium and there's high on hopium, right? A lot of that in this industry. Yeah, you see, Sassalan says, I can't believe I blew up my 7K XFA. Yeah. So I'm sorry to hear that, Sassalan. I really am. But that's what happens. You get blinkers, and then you just keep going and keep going and keep going. So look, these tools here, lock out risk settings for the day. So whenever I take a payout, I actually size down and do all of this. I lock up all of the big symbols, and I lock out my risk settings the previous night. So not on the day that I come to do these streams. I'm like, okay, taking a payout, now I need to pipe down for a few days to build that back up. And, most people take a payout and then go, or even bigger size because now I want to get back to where I was before the payout. No, do the opposite of everybody else, right? Do the opposite. Just seeing the Bruno posts on Trading NQ. Yeah, it's very, very, very correct. And let me just show you guys. So this is what Bruno said. It's Trading NQ. Yeah, all in like a split second. It's unbelievably quick. It's just like, what are we doing? So I don't like that sort of price action. Maybe that's me. Maybe that's me getting a bit slower with age. Or maybe that's just me not wanting to have seizures. But yeah, once you've gotten some buffer, it's time to protect yourself from yourself. And this is where, these risk tools are amazing. I have something similar on NinjaTrader as well. So I never really allow myself, especially at like danger zones after a payout. That's a danger zone. Once you've had, a few, like 5 or 6 good days, that's a danger zone because you're like, I need to keep going, and it just messes with your head. So stopping yourself at like, stop yourself at 10% of your account balance. Stop yourself at 700 on those danger areas. Like, why do you feel the need to blow up $7,000 in one day? That's a lot. It's a lot, especially if that's all there is in the account. If you've got 70K in there, yeah, blow it up, whatever. It's just one day. But 7K, protect yourself from yourself. Save yourself. Save your soul. Hi, Deeyana, what drove gold up last night? The same thing that's been driving it for the last year. I don't know, man. It's the uncertainty. Obviously, it's the uncertainty. But is this like, let's have a look at gold. It's totally bonkers. Like, I don't know, man. Gold, I haven't really traded much. It's like, what is this? And it always does these like, let's make an all-time high out of hours when nobody's open. I've seen it make an all-time high in that period when we can't trade on Topstep. And I've been on those trades in my private account. And I'm just looking at it going, is it really going to do like the last final hour when nobody technically, it's the end of electronic hours, but you can still trade on most brokerages for an extra hour or so. I'm like, is it really going to do this? Is it really going to do this? It's doing it. It's fucking effing doing it. Nearly swore there. So I'm like, what's good? We're trying to keep it PG. I know that everybody's over the, over age of 18 and stuff, but, we're trying to not swear too much. Otherwise, this would be a very different stream. If you want to hear me being more profane, there are my own streams that I don't run anymore because I got sick. But yeah, if you go back like a year or two ago, there's a lot of F-bombs and, a bit of a different vibe. But yeah, what is driving gold? Uncertainty. And then even last year, it's like, what the hell was driving it last year? Because let's have a look. Look at this. There's a weekly chart. like, what is this? What is this? Okay, so it was a little bit quieter in and around COVID. Yeah, when it was going in the same direction as equities. Yeah, this is years. This is a weekly chart. And then, since 2022, October, it just started to go up. And it hasn't stopped. So here we are. What's driving it? I don't know. The world going to shit? I don't know. But yeah, I think gold is a little bit irrational. This smells of a bubble to me. Do we really have that much? Like, can we actually call this protection from inflation? Like, what sort of inflation? We haven't even seen the inflation yet. So what are we doing? Like, front running the inflation? Maybe. What are they preparing for? Like some Mad Max situation? An asteroid hits. We still have tariffs. And now there's trouble everywhere, right? Let me go get my leather pauldrons and a machete, to get ready for the next session. Blue Boy says, Dee, do you find that initial balance works on all instruments? I think it does. Yes. All of them have this idea. Now, we see the house account taking these opening range trades in crude oil, and I am really not in favor of that, okay? Why? Because crude oil is really directionless on most days. So sometimes they catch a decent one, but it's rare. And that's because a lot of the times crude oil will wag over like both sides of not only the opening range, but also the initial balance. Like it's going to be really indecisive. And then it kind of makes a decision and then you get a fake out. So that's crude oil for you. So trying to run trades that run for ages in crude oil is an outlier and an opportunity to maybe run it when we see something that's really changed. Like maybe there's a conflict somewhere. There's conflict somewhere. Or there's maybe, some problems with supply or demand, like we've seen during COVID. Because I don't know whether you know this, but China accounts for like 15% of the entire world's demand for crude oil. So when they stopped travel, everything just went to shit, as we've seen. So yeah, that's why futures went negative, and there was this whole uproar. And yet, Series 3 book study guide still says futures cannot go negative. And I'm like, okay, need to update your books. Heavy down analysis for GC today. CD today? I have not, because it's just going up and up. This is the point where there's not much to analyze, right? If you see some strength coming into gold, that's it. Find any level that makes sense, and just go. So I don't like getting involved in gold when it keeps making all-time highs and all-time highs and all-time highs. Primarily because we've seen it go into an all-time high and then smash down by like 200 points. So I think it's a dangerous product at the moment. Obviously in chaos there's opportunity. It's just that with the size of the candles that we've been having on GC, I just don't know how to limit risk on this thing anymore, right? So here we go. Let me just measure this for you very quickly. If I take my crosshair here to measure, and this is supposed to be out of hours, right? This is an out of hour session on gold. 122 ticks is the size of this 30-minute candle. 122 ticks. What the, And then if we look at New York session, 124, 213. And yet, is this like a smooth trend? I mean, come on. Getting involved in this on like 200 tick average range of candles, like what? I would want it to go smoothly in one direction, but no, it, excuse my French, dicks around for 90 minutes, fails the auction, but then invalidates it because it comes back out of the initial balance, if we're going to diagnose this properly, and then goes. So you would have had to have like balls of steel to actually sit through 2 hours of consolidation wherever you entered, and just to hope that it doesn't come back and smack you in the face, all while watching it move 200 ticks on average per 30 minutes. I don't know about you, but to me that's a bit more, that's where I'm uncomfortable with, right? I'm like, ugh, really can't be doing that. So yeah. All right, so copper is actually extended to the downside. Let's see what they do with that. Micro copper. There it is. I mean, this is really uncommittal. They're like, let's dip a toe in. Now, if they, commit to this, that would be great. But if this candle stays tiny, I'm probably gonna wait until the next session and then see what COMEX wants to do with it, because I want to see commitment because we opened on the nose inside value. So it was kind of at the top of it, because the open was here. So it was like, is it above value? Is it inside value? Like, nobody really knows. And on my full contract, it actually opened just at the line. So right now I'm unsure of the sentiment of where they want to take it, and I want to see what they want to do with it. So this smash to the lower side is going straight into a demand area. So let's have a look at how this looks on a 4-hour chart, which might give us a better overview. Yeah, so see, here's the danger, right? If we are ending up here, and we know that Frankie Fakeout already dipped down and pulled back up, to me, we are still outside of this, we're still not claiming the demand. We're going into it and then bouncing from it. So if this kind of comes back into a failed auction, to me, that would be a better setup. So I'm still not really in favor of shorts here. I would need to see some, big commitment, nice big move away from the initial balance, some single prints, and they're like, okay, the demand is breaking down, nobody cares, let's go. And then likewise, would like to see GEX2 reclaimed. So I want to see it above 460. So yeah. From this larger time frame, if this is just a slowdown, just a pullback to the nearest demand area, and we are still looking to go long, I don't want to be on the wrong side of that, okay? So yeah, this is not, in a large time frame, this is not really matching my expectations. Somebody's squealing outside of my door. I don't know what that's all about. They're sitting there going, oh, oh. Big money and real traders trade under 30 seconds. Yeah. Through HFTs that cost $1 million to maintain and many more million to get. So yeah, you can trade with billions of dollars and move the market in your favor and then claim you've got an edge. It's a different game, right? But we don't have, lightning fast, preferable fills, because I don't know whether you know this, but the fills where you get preferable fills for a lot of trading, that costs a lot of cash. All we can hope for on the retail side and even on the business side is to pay for like direct CME connection, but they don't give you preferential fills. Okay, there's this thing called the central clearinghouse, the clearinghouses, right? And the clearinghouses, central, why did I say that? The clearinghouse prioritizes certain orders, right? And if you have somebody on the retail side who wants to fill 50 NQ contracts, but you also have the little guys who want to fill 1, 2, those of us who are trading smaller, who do you think is going to have preferential treatment? The guy who trades with 50 lots or the one who trades with 1 on the retail side? It's the little guys. They get priority over fills. Now, if you pay enough money, the clearinghouse and CME, they can provide these like preferential fills, but it's not cheap. It's usually outside of the scope of a retail trader, because it's a lot of money, right? And it's not like you can't do it. It's just that nobody does it manually. First and foremost, nobody does HFT manually anymore. You don't have market makers in the pits doing 1,000 trades a day anymore. It's all done through computers. And Wall Street G, if you worked in the industry, then you know this, right? I'm not telling you anything new. But yeah, so it's possible for sure with enough money, enough server power and all of that. But it's unaccessible. Like the retail trader cannot, it's always going to be in a disadvantaged position, however you say that, a position of disadvantage if they try to emulate what the hedge funds are doing with HFTs, because they don't have preferential fills. So even if you try to do it with much smaller amounts, there's still going to be lags, and they don't care, right? They just don't care. B4L trades, can you explain why you're against lower time frames? I'm not against lower time frames when you know what's happening on higher time frames, but I'm against lower time frames because look, what do you have on a 15-second chart on copper? Well, nothing, because it's a very thin market. But let's change let's change to like NQ. 15-second chart. You tell me, what do you see here? What do you see here? You see that it's going down, right? But where are we? Where are we on the daily chart? How does it look on the daily chart? Oh, look, it looks like actually we've consolidated and we're doing rally-based, potentially rally. And we also have some levels on the weekly chart that are very interesting. So we had a very nicely defined top, previous top, that we bounced from, right? So what is the more likely scenario here? That on a 15-second chart you can go short and do your 15 seconds. And the problem with that is that you are usually in a negative R environment. Whereas when I get involved in my trades that last me for 3 hours, I get 300-400, like all last week and the previous 2 weeks. I was catching like between 300 and 400 ticks on YM, on copper, on natural gas. I had like smashing natural gas trades, literally nearly every day. And then I'm seeing other people going, oh, I got 10 points. Like, why? The market gave you the opportunity for a sustained auction that went for 1 million ticks and you caught 10. It's like, to me, that's like not matching your strategy with the day's expectation. That's why I have a problem with it. It's not like, oh, don't trade from it. There's a use for lower time frames, but honestly, the more the novice to trader, the more I see them trading and gravitating towards those tiny time frames. And I've said it before, it's a good band name, right? Tiny time frames. Right, let's go back to copper. Ah, look what copper is doing. You can see it. Look at that. So we know this is a 4-hour chart in this yellow area. What do we have? Oh, look, we have a wick. Yeah, so I'm against small time frames for a couple of reasons, because there are things that you just don't need. Like, for example, if I want to time my trade based on a 30-minute chart, one thing that I do, especially in high volatility, not so much when we're like in normal times, but if I want to get the best outcome, I did what I did here, I think a couple of days ago. So or on Monday, I think it was Monday, where I went into a trade after the extension of the initial balance, and then it dipped down. And then I sort of had a level, I measured the average true range of the candle over the last 9 candles, and then I sniped the long after a big pullback. It just so happened that on that day, on Monday, we also had the initial bounce low and VWAP overnight, literally right around the same price. But the reason for going into that, even after a big pullback, was because I had a direction, I had a trade idea, and then I just needed a good pullback. And the ATR intra-candle can give you that. So, a lot of the days, if I'm busy, I'm doing like a million things, I won't even look at the little time frames. I'm just going to use that system to run my trades. And because my stops are volatility adjusted, so I don't dick around with tiny little stops, they are sufficient enough to make me survive for 30, 40, 50 minutes with not too much drama before the trade does what it's supposed to do, okay? So it's like literally just slowing things down, yeah? And when you go into the 15-second chart, you're not slowing anything down. You're basically seeing the forest for the trees, and you're losing everything. You're losing sight of where you are in a larger time frame, what the big institutions are trying to do. This is very important during high volatility times. What are the large guys doing? You know, where are we on the weekly, monthly, daily time frame at the very least? Yeah. Brooksy says, I've got 3 XFAs and just copy trading them with 1 micro per account. That's excellent. I love that. Grinding the balances higher. Will size up as the accounts grow. No rush. That's what we want to hear. You know, that is longevity. You're not trading with dollars in your eyes immediately, but you are effectively using delayed gratification to build something that will last you. That is what it's all about. It's not about fast and furious and then blow up spectacularly because you crash and burn. It's, you know, if you want longevity in this game, you've got to slow down and you've got to have proof of concept over time. Over time. Not over 2 days and 3 days and 1 week. Over time, are you able to withstand drawdowns without blowing up accounts? Can you drag yourself out of them? That's an art form in itself, right? Because you have control of yourself, control of your mind, control of all of the negative emotions that hit you all at once and are probably the toughest times that you will ever experience as a trader, because you feel like shit, you think that you're a muppet, all of the stuff that you ever had a problem with in your life just hit you right across the face. I've spoken about this before. I had a sense of inadequacy because of a stupid comment that my father made when I was 3 years old. Now, you've seen my sister in here. She's 10 years older than me, 10 and a half years older than me. And she was always better at things than I was. Why? Because she was 13 and I was 3. Obviously, she's going to be better at things. And then my dad said something like, oh, yeah, you just suck at everything or something. You know, not like Sandy, you suck at everything. And that stuck with me to like the day that I started trading and I started thinking, hold up a minute, I think that I need to prove myself. Why? Because of that silly little comment. It literally stuck with me from when I was 3 years old. I didn't even realize it until I started trading. Because I was like, I'm a driven, ambitious person. You know, I'm a high achiever. I do everything. I never do anything halfway. You know, Dee starts bodybuilding. She has to do competitions. Or weightlifting. I have to, go and win 7 of them. I start trading. Yeah, I have to like learn everything and anything about everything. And then start trading, commodities that are technically actually a little bit more difficult than equities. Because they don't necessarily have defined trends on a lot of the years. And they rely on physical supply and demand, and you have to understand a little bit of macro side. I started playing an instrument when I was like 4 years old. That's not enough. I have to play 4 instruments, and I have to do classical and also build a pop and rock career. That was driven out of my sense of inadequacy, because my dad told me I suck when I was 3 years old. It's totally stupid. Like, my dad was, he was a bit of a difficult man, but he was a loving guy. He did give us beautiful childhoods. My mom and dad were still together when he died, and I don't come from a broken home. Like, there was no reason for that sentiment at all. And yet, my little child brain at the time was like, "No, I need to prove myself," and it stayed with me. It's just so stupid. And once you realize how some of these self-limiting beliefs that you hold about yourself are literally totally meaningless and have no sense of reality to them, you get through this like liberation phase where you just don't care anymore. And you're like, yeah, whatever. And then you can reflect on your achievements and use that to power you forward in your trading journey. Because, even achievements like learning a language or, achievements of finishing school. There are a lot of people who don't finish school, the most minute things that you can find that are positive about yourself, that is what should force you to get better and better. And then the better you get, the more achievements you have, and the more you can sort of lean into them as you grow as a trader to increase your confidence, increase your ability. Telling yourself, we've seen it yesterday, Jerome was talking about it, telling yourself negative things, it shapes your mind, it shapes your brain. So if you keep telling yourself after every lost trade, oh, you're a muppet, what is that going to do for you? instead of going, okay, that didn't work, I'm still learning. That's so much more positive than, oh, I'm such an idiot. Right? So you have to be very, very mindful. We saw Meet talk about the differences between trading in the pit versus trading now on the screen. And he said it, emotions, right? It's so different. In the pit, there was no, strategy. You had a visual cue of who's doing what, and that was your edge, right? You could see who's sweating and who's doing well. Now, it's just us against ourselves with all of our self-limiting beliefs and all of the people around us who doubt you and, they call you a gambler and a whole bunch of things. And, I'm one of the people who just does whatever I want to do anyways. Like, I don't really particularly care what, even my own mom thinks, whether that's... She actually laughed at me, like, when I said to her back in 2007, I was like, oh, Mom, I'm studying to be a trader, And she's like... and I was like, oh, yeah, thanks, Mom. And she was like, no, I didn't mean it that way. Like, why I'm saying that, right? And I'm like, yeah, because I sucked at math, nearly failed the year. I totally get it. But at the same time, this is more pattern recognition. And, it's not all about math. And it turned out that I'm actually pretty decent at math. I just wasn't interested in it when I was young. Go figure. You find out new stuff about yourself, new talents, and, So, yeah. Just hang in there, Brooksy. You're doing very well. And it's always a battle of time. Some people are like, oh, I held on to my discipline, as if it's like something to hold on to, right? You're like holding on for dear life. I'm doing discipline. You can't over dramatize things that well. You need to kind of almost normalize good trading behaviors, just like you're normalizing brushing teeth every day. Okay. The same thing, right? Oh, you use a particular size for this size account. That needs to be normalized. That's a habit. Or you use volatility adjusted stops. You see something that's, let's say, moving 21 ATR. What's the stop? I'm not going to go, I'm not sure. Can I use a tiny stop? No, it's going to be a 45 tick stop. No questions asked. No, like, oh, should I use a small stop? Can I squeeze out a bigger position? No. 3 to 5 micros, because I've kind of generated, I'm trying to only do trades on Eurosession. I want to make this last a long time. It's not a matter of thinking about it. It's a strategy. It's a plan. You don't deviate from it. There's nothing to over dramatize. You're just like, cool. This is what we're doing. No thinking, right? You don't think about brushing teeth. You don't go, okay, it's the morning. Now I have to brush my teeth. Oh, yeah, I have to put toothpaste, and then I have to put it on. Oh, it's such a chore. Oh my God. Can I just skip that? You don't do that. You just do it, right? So try to make all of your trading habits the same way, okay? And work on it one by one. Don't just go, oh, I want to change my stops. I want to make sure I add this. I want to stop smoking. I want to stop drinking coffee. I'm also going to start running in the mornings. I'm going to move house. I'm going to do this and that. Just don't do that. Pick the thing that is causing you the biggest issue. And for a lot of you, it's going to be size, okay? So for the next 6 weeks, commit to only trading 1 micro. Only trade 1 micro. If you like to partial positions, trade 2 micros. It will be. But, commit to a habit. And after 6 weeks of doing just one thing every day, you will be amazed at how much you change as a person and a trader. And you will also be amazed at the results that can be done on 1 and 2 micros. Suddenly you'll be like, whoa, I'm profitable. Which platform is this? It's MetaTrader 5, very old style platform from AMP. So these are real futures contracts. I know that the whole community has totally moved away from MetaTrader in general, but this is the futures. They actually have CQG on the back end. When we were creating our indicators in 2015, we used MetaTrader because it was the biggest European platform. at the time. Everybody was using it. So we made a decision to bring professional trading tools to a retail trading platform. That was the idea behind it. They're still available. I still will probably stay on AMP MT5 for as long as they offer it, because I've been charting on it for so long. I'm very comfortable with it. But in the last sort of 2 years, we are trying to translate all of our tools into NinjaTrader. Okay, so the TradingView is a little bit difficult for us because it's PineScript and then sort of a wrapper of like JavaScript. It doesn't offer as much flexibility because it's not like a true object-oriented programming language. It's just like a weird sort of, almost like a scripting language that somebody, like an XML, that somebody made a little bit better. So, you know, some of these CPU optimizations, memory optimizations that we do with our tools to be able to do backtests with the candles, but also showing you exactly how the levels looked with very little lag or no lag at all. Obviously, that takes a little bit more sophisticated approaches, and that's unfortunately not possible in certain languages. So for now, it's NinjaTrader, even though they're a bit of a dinosaur platform too. All right, we've got 5 minutes. Let me see. Christian says, for me, it's falling for false breakouts still. Okay, do you look at volume? Now, here's where a low time frame would be helpful, right? Breakouts. So let's say you look at a 3-minute chart. Shout out to Coach Jay. What is volume doing? Is it patchy? Or is it, do you actually have like 3 or 4 increasing? Like, for example, this one was a valid breakout. This one, I mean, look at it. Look at it. Let me remove myself so I can show you, because I realize you can't see that. So valid breakout for me was this one. So we went down, down, increased volume, and then obviously we retested this 9 EMA on a 3-minute chart and carried on, right? But this breakout, well, we actually have the opposite now. So if I wanted to play along, I mean, let's try it, right? Because we have an increase in volume. That's how you know whether the breakout has got juice behind it or not, by looking at volume. So it's not about being psychic, oh, you know, what breakout is going to be good. Look at volume. If there is some real power behind it, you will be able to see it, right? So again, 45 ticks, we know that's a stop. There's a bit of a spread here, but you know, that's what it is. But yeah, I would say this whole attempt at going lower is just a meow, 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 meow. So let's try another long, right? There's a failed auction, rotation, maybe asymmetrical neutral day. Best case scenario, right? I'm dreaming here a little bit. Trader math. But yeah, looking at volume is just like meh on the downside. There's nothing. Even if you look at the 15-minute chart, there was no power behind this smash through the initial balance low. And that usually means if you get lackluster break of initial balance with no volume supported, and then volume starts creeping in on the other side, that's a failed auction, okay? And then you can expect, at the very least, a rotation to the opposite side of value, but the volume has to keep coming in. So if the auction kind of fails, but then it runs out of steam, you're probably looking at a quieter range-bound day rather than a proper failed auction that just kind of turns around and goes back where it came from. Trading Nichols says, Topstep lets me get so many time frames. I paid to me a frick ton to TradingView, but I've paid for 2 minutes apparently, but not 3 minutes, lol. No ticks either. Love ticks on slow markets. Yeah. Oh, JJFX with an interesting thing. I think volume is just random. Like, hey, markets are random. Why stop at volume? Markets are random. This is gambling. Listen, these are futures markets that are centralized markets. Price, to quote Mr. Dalton, price is nothing more than an advertising mechanism of volume. Whatever volume does, that is what prints as price action on the chart. Okay? Big secret. Is the Forex, because looking at your name, is the Forex volume random? Absolutely, because it comes from a bloody broker. It has nothing to do with the centralized exchange. It has nothing to do with nothing. It's literally just broker clients going, yeah. We're talking about the centralized exchange. We're talking about the CME, not some person in Cyprus in their like little server room running a little white label brokerage somewhere because they paid 25 grand to get a white label software from MT4. It's actually more than that. Let's say like 75,000. But, this is CME. Everybody, all the institutions use futures markets. You have farmers using futures markets, producers and users of commodities. We're talking commodities, right? They use the futures markets to hedge their positions. Goldman Sachs uses futures to express a lot of their positions, to hedge their positions. They use the futures market. Is that random? Like, if you don't know much about it, just say, I don't know much about it. Don't put out blanket statements to traders who have been doing this for like a very long time, nearly 2 decades, and go, volume is random. It's like me going to, let's see, I know nothing about chemistry, and I walk into a chemist lab and just go, all of that is just nonsense, right? You're just going to blow shit up, right? Is that what you're doing? So let's leave this is all random and it's gambling, and this is data science of probabilities and odds, and volume is a huge component of that. Whether you use it or not, that's fine. Just know that whatever price action you're seeing, that comes from volume, mate. It doesn't come from, out of thin air, just it's just random. There is structure. That's why people can maintain performance of very, very long periods of time, like years in some cases, decades in other cases as well. Is that all random? Maybe. If you want to believe that, that's fine. More money for the rest of us. Yeah, they give tick volume. You're right, Blue Boy. But, how many people... how many people look at tick volume in Forex markets? I've never seen anyone, but yeah. All right, let's see if we've got any more questions. If not, I'm going to wrap it up for today. I think I answered everything. Did I miss someone? Tostino, yeah, I did miss some. Okay, hold on. I know what to do. I know how to do it. I've proven to myself that I know when to do it or not. But I don't have self-control. Should I just not trade and work on the donut I have for a brain? Here's that negative talk again, Tostino. Negative talk. Here's a thought. Just by the fact that you've spent, by the looks, extended periods of time trying to crack this, and you say that you know what to do, you're already not an average person, okay? So you already don't have the donut for a brain. So stop with the negative self-talk. And also, I don't have self-control. Nobody's born with self-control. Some of us are born with maybe a little more idea of a drive and self-discipline than others. But at the same time, self-control is like a muscle, okay? You don't just develop self-control out of thin air, right? You effectively set a habit. I spoke about this just not too long ago. You set one habit to work on, and then you enforce it. It's deliberate practice of one thing. Once you crack that and your brain starts to create new neural networks that eventually get more efficient over time. There's that word again, time. That's when self-control starts to show its lovely self, right? Before then, it's all a huge effort to make yourself do what you want to do. And it is, like, it's horrible, right? It's like, oh God, think about going to the gym. Like, nobody wants to get up at like 6 a.m. and get your ass to the gym, right? But you train yourself to the point where you just get up and that's what you do. It's very difficult at first. But then over time you get used to it. We are very adaptive creatures, so don't sell yourself short as a human being. It's absolutely amazing what we can adapt to. And adapting to positive habits, especially in trading, is probably one of the toughest things you will do, ever. But it's not impossible, especially if you focus everything on doing one thing at a time. Focus 6 weeks doing just one thing. Then add on to it. That's what I did for myself. Because I had this cycle where after about 8 weeks, I would lose control and I would just go completely AWOL. So I had a timer that would tell me, after 8 weeks, be careful. And then I used all of my power and the risk tools that we coded up to stop me from doing stupid things. Okay? Since like 2010, I haven't traded without a daily loss limit or without trade limit on the day. That's another one. And Bernard is here opening up the window. Bernie, I'm still working, mate. Do you mind? Yeah, so don't talk negatively about yourself, please. It's a very slippery slope. Will Sorto says, for beginners, would you recommend watching multiple futures or just focusing on one? Focus on one. It's kind of like playing a musical instrument. If you want to learn to play well, are you going to start with piano, violin, guitar, and drums? Or are you going to focus on one? And then hone your skills there, get the speed of processing up to scratch, up to a certain level, get all the phrasing, learn the scales, learn the intervals, practice them, practice your finger positioning, practice your muscle memory, and then maybe you can move on to the next instrument. Trading is exactly the same thing. Learn how one thing lives and breathes, but use something that is more suitable for beginners. I always like to teach on YM or ES if we're talking equities, and if we're talking commodities, these days probably copper, because it's pretty nice and smooth and very rewarding. Takes time to kind of show up what it wants to do, but yeah, pick one, hone your skills on one. Then maybe after a year or so, you can add. Adding another instrument is easy. Honing your strategy and knowing what your setups look like, and also making sure that your discipline follows everything that you need to do. That's the tough part. And you're not going to do it by watching a million things straight from the beginning, okay? Yeah, Trading Nichols says, I knew a prodigy as a kid who picked up tons of instruments and kept getting this strange wide knowledge. It was not normal. Yes, I was similar. I've started with piano at 4, but then I very quickly moved on to flute. Then I quickly added saxophone, then I added guitar. And I actually can play a little bit of drums. I'm not that great, but I'm probably better than most amateur drummers, actually. Obviously, if you get somebody who's highly skilled, I suck. But, I can keep the rhythm. I don't have full separation between, like, the feet and both hands. But I do have decent separation between 3 of them. It's a bit weird. Yeah, so I do have some unusual abilities. And I don't know. I think it has something to do with photographic memory. Don't quote me on that. But I'm just, like, able to process things at a much more, how would I explain it? I don't even know what to compare it with. So, if I'm looking at a problem, I first remember every single instance of that setup. Like, for example, I can go back in my mind to like 2013 and know what crude oil looked like back then, and then run myself through some setups that I was learning about and asking questions, and how much clearer those setups became over the years, for example. It's like, yeah, I knew that, let's say a value test and rejection from the bottom, it looked a certain way, but back then I probably wasn't able to exactly explain to you what I wanted to see. It was more like, it was a lot more haphazard than it is now, whereas now I know exactly what I want to see. So hopefully it makes sense. But for some reason, that tends to happen a little bit quicker with me. So I was able to move from one product and then very quickly over the next sort of year or two, add about 7 or 8 things that I learned about very quickly. And I did the same thing with copper last year. I didn't trade copper much. And within like a month, it almost became like the second, second skin. It's like, oh yeah, we just trade copper. Obviously, I had stats from last year that I was running journals and how it behaves in times of day and, specific things that copper does. But I wasn't doing the whole start from scratch. It was already starting from a good base that I know how things move. And then it was like just a matter of moving a few parts here and there to make it fit, if that makes sense. And that looks like, oh yeah, it's like I've been trading copper forever. Like I've traded copper, but it wasn't my main instrument until last year. Crude oil was my main instrument, and then it abandoned me. It cheated on me, and it abandoned me. All right, I'm going to end it on this. Why is Dow dumping? Because it's Dow, and we're coming into pre-market, and these weird things happen. Pre-market, where you have these shakeout moves, and then we have the market makers that step in again for New York. But yeah, this is now the time when US starts waking up and you get the increase in volume. So you see some moves that are pretty juicy but can be a little bit irrational. So for those of you who are trading through the overlap, don't be surprised if the instruments that are pretty quiet for the London session suddenly start moving, because this is the US effect, right? They're up. They're placing positions, they're getting ready. and yeah, it shows up as a increase in volume, right? Range bound because day before holiday. No, I would say some positioning ahead of the holiday. So I don't think we're going to have a range bound day. But again, anything can happen, ACH. We've seen that more than anything we've seen last year. Huge volatility, it's true. Anything can happen. So let's see what the day brings. I will bid you farewell until next week. Have a great Easter. Happy Easter, everybody, if you celebrate. I am going to be here on Monday, despite Monday being the UK bank holiday Monday. But I will likely take the 5th of May off, the next holiday that we have over here. Let me throw some links for you. Come and join us in Discord. We have a whole bunch of people who are willing to help, moderators, ambassadors, coaches, trading buddies, people with experience, complete newbies looking for advice. Over 100,000 people in Discord now, so you will find what you're looking for over there. And if you want to share your story, if you want to come and join us on TopstepTV, it doesn't matter where you are in your journey, fill out the casting call form and someone will be in touch. That's it for today. Thank you for joining me. This has been the Euro Trade on TopstepTV. I'm Marcus Stoker D. Take care and enjoy the rest of your day.